Welcome everybody. I am not on the camera this time. I am about to do the first update for this month, first dividend update. I have a total of $175.27. That's pretty big. My first year I made $551.62. That was my first year. Last year, that's the blue, I made $1,753.09. And right now we've already, put in almost a third of my first year. So obviously the account is a lot more than it was back then, but damn, $175 this month. The Scotia savings account is ripping right now, but that's not always going to be like that. That'll probably be reduced to like $10 soon because I will be buying a car. And once I buy a car, we will start investing again. And after I'm done buying that car, I plan on having quite a bit of money left over. I'll most likely max out my TFSA. We'll see how much my wife has available for her TFSA. We'll add that, and I will be adding that to the total portfolio because it is both of ours, this included. And then we'll also be maxing out our first home savings accounts this year. That is going to happen. And, sink or swim, that is the actual plan for that. I did do a little post a little while back about how I'm going to achieve that and what my savings rate is going to be between myself and my wife. And yeah, it's looking good. It's looking fun. I can't wait to see how this year is going to play out. I also did set a new goal of $2,000. So a little bit, about $250 more than last year. And I want to see how reasonable that is because there's not going to be quite as substantial of dividend growth, substantial of portfolio size, because I will be only able to add about $6,000 to this account. So, in saying that, my portfolio has doubled between the start of my first year and the end of my second year. My second year of investing, the portfolio doubled from about 50,000 to almost 80. So, yeah, things are going rather quick, a lot faster than I thought that this was going to happen. So, yeah, it's looking fun. It's looking good, and we have quite a bit of cash saved up. Between selling my car, I think we'll be buying the next car for about $20,000, and $20,000 is not that bad. It's obviously it's a lot of goddamn money, but $20,000 we're not financing. We will just be able to buy that cash, and then afterwards we will still have about $20,000 left over just in auxiliary money. That's just cash that we've been holding throughout the year, saving up for this. And my wife just started her new job where she's getting paid more than we thought she was going to. And when I did my estimates, I made sure I could pay for everything myself before overtime. So I do work a lot of overtime, and I will be acquiring more money than the initial plan as well. So yeah, things are moving smooth, and things are looking up. The dividend I'm making, that's looking up too. I will be reinvesting the dividends quite a bit more heavily now, just because of the amount that we're getting. $75. I do believe February is a slower month, so we will take a look and we will make sure February. I expect it to be quite a lot less, but then March always picks up. Medium month, small month, big month, medium month, small month. You see what I mean? There's always a pattern for it. It's just how the companies that I own and how the dividends stack up. I did add MO to the stock list too. So, I'm kind of excited to see how MO performs. And that's quite a substantial stay. Pay 10% dividends, so about $200 throughout the year. So already I'm probably low. I should probably set that a little higher. Maybe high end 2,500. You know what I mean? Let's shoot for 2,500 in dividends. I'll be pretty happy if I get that. Anyways, I'll see you guys next time. Bye now.